So I ditched my wife. She loves to read her Kindle rom-coms. She reads a bunch of those romance novel crap, and she gets lost and loses track of time. And we were down there for a little while, and once it gets too hot, I have to, even under the umbrella, I don't like the heat like that. So too many people coming around. I was going to do the Twitter space right next to her because she had her earbuds in listening to her audiobook as she reads it. And the population around us was getting a little loud. So I just told her I said I'm just going to come back up to the room, get some AC, and hang out with you for a little bit. Um, I know I say this all the time, but I promise you that this will absolutely not be a long one. Um, she will absolutely get irritated by me not being down there because we're away. The reason why we took off down here again, obviously, we're interested in some real estate down in this area, and I wanted to look at one more property a little bit lower than where we are now. But it looks like 30A on the Panhandle area of Florida is probably where we're going to be heading up to in a couple of days. So I'll be talking to you by way of hotel Wi-Fi, like I am here. Everyone's doing well. Three members of our family were in the hospital, one of which my mom. She's been released. So one somewhat life-threatening. The other two were just scares. So thank you for your concern. Everything is well otherwise. So I want to talk a little bit about this past week. The idea, if you hear the air conditioner running, the desk that I have in this room, they positioned it right next to where they have the air conditioning unit. So to me, it doesn't bode well for someone that would be working, but it is what it is. So I mentioned a few things this week, not a lot, but the things I mentioned this week were pretty much spot on. I talked about how the NQ NASDAQ futures for June delivery, NQM 2023. I'll give you a moment. You can load that up on your trading view chart while we're talking. For those that are lazy and don't want to go through the process, I'm going to complain and wish you would just do a live stream and do it that way. I will be talking about it in review, so that way, if you're busy doing yard work or working out, whatever, I'll have some visuals for you. But for the folks that just want to sit here and have a interactive time with me, I haven't had an opportunity to see much of the charts. We did some driving yesterday to get down into this area, and we'll be driving again tomorrow. And then we'll work our way back up into northern part of Gulf Coast of Florida. So it looks like I'm probably going to be securing another property down here. So she's really in love with this area. So got to keep the wife happy. So NQM2023, that's your trading view symbol for NASDAQ. And if you go out to your weekly chart, and you can pull that up on TradingView by hitting the number 1 and then the W, hit that. Once you load up the NQM2023, it'll take you to your weekly chart. And I mentioned that we had a volume imbalance. I'll give you the actual dates on the weekly chart. So the high candle that makes the high of the volume imbalance, that candle is going to be on your weekly chart on Monday, August 15th, 2022. That's what your chart should say on TradingView. And the next candle to the right for Monday, August 22nd, 2022. Those respective candles where they have a wick not even touching, the separation between the bodies, that's the volume imbalance. And I went one step further this week and I took your attention into the actual gap. This is a liquidity void. I know people have referred to these liquidity voids in the past, but there is no liquidity void apart from an actual gap where there is no volume, no trading, no printing of any price at all. That resides between the low of the weekly candle formed on Monday, August 15th, 2022, for NQM2023 symbol. And in the high of Monday, August 22nd, 2022. Okay, and those respective price levels are going to be a high of 13,480.75 and that low of that volume, I'm sorry, that liquidity void, it's an actual gap, 13,453 even. Okay, so to the goober that said that 13,453 wouldn't be hit this week, it was, and so did 13,480 and 3/4. And I love how these folks have selective hearing. Okay, uh, my focus for the upside was primarily on one specific market, and that was the NQ. You can go back to look at the tweets, and the weakness or any kind of shorts would have been on the S&P or ESM2023. Okay, I called out the levels in advance, told you what we were looking for, and if you put those on your chart and post the tweets as well, marking when and where I said it, you can see the major intermediate terms swings in the marketplace occurred right at those levels. Okay, so I'll go through them briefly here in my discussion, and I'll tell you what that might mean for ES going forward for this week. So with those levels in mind, having 13,480.75 and 13,453.00 on your chart for the weekly. Now drop down into the daily. You can get that by hitting the number 1 and the letter D, and that will take you into your daily chart. And those levels you can see pretty much repelled price on Friday. We went to consequent encroachment of that gap on Thursday. Notice that it went right between those two levels, 13,480.75 and 13,453 even. Okay, Thursday's price high came right up into a high of 13,470.25. So that's very nice to see that. That's a signature you want to see. Is it respecting that level? And then Friday, we opened, rallied up to it, had a little bit of a mohawk above the high that we would be looking for that gap on the weekly chart. And if you look at the tweets, I shared that gap with a blue rectangle in a tweet. So go back and look at I didn't do too many tweets this week, so it should be easy for you to find it. I also started the analysis off this week telling you that I was looking for and was interested in that gap as a draw up. My concern was CPI. Obviously, CPI can be murder to us as traders. If we're offside, that means we're not on the right side of the marketplace when it's released. It can run you over and tear your face right off. So you don't want to be positioned ahead of CPI for that very reason. So I mentioned on the daily chart for NQ, I favored the upside. Okay, so that way we know bias was, for me, sharing it with you publicly, I wanted to see it go higher. Admittedly, for CPI, I don't want to tell you what to do because I don't want you to get hurt if I'm wrong. And traditionally, I'm wrong. It just so happens that I was right this time, but for transparency purposes, the majority of times on the CPI number, I'm not all that accurate because it is what it is. So if I wasn't, I'd be trading all the time. So that there would be something else I would give you a model around it. But I've not been able to frame a model that is consistent ahead of CPI. Okay, so I stick with telling you, gun in my head, this is the side of the marketplace I'm looking for. Even though I may say, look, if it's going to go down, it's going to go for this particular sell side. If it's going to go up, it's going to go for this particular buy side. Now, if you're a goober and you're listening to that and you stop right there and you take a sound bite of that and put it on the internet and say, look at this, ICT does, calls it high and low. Keep listening, because I always say, gun to my head, I favor one side or the other. I did that this week again, like I always do. And I was framing it on the context of that daily candle on, now you should be on TradingView, NASDAQ symbol NQM2023 on the daily chart. Put your mouse over and hover over the candle for Friday, May 5th, 2023. Okay, so that particular day, that is your fair value gap on the daily chart for NQ, which is below the gap that had not been traded to and through. Notice that the high on that particular candle fell short of that 13,453 even. Okay, so it didn't do anything on that day. That's the day the goober said, You said it was going to go to 13,453 and it tanked. It's an objective. Okay. You have to wait for time and price to offer the setups. The fair value gap, we dropped down into that day, basically consequent encroachment, which is the midpoint between the low of candle, the daily candle of May 8th, 2023, and the high of the candle on May 4th, 2023. So those two respective candles, you should shade that with a rectangle, extend it to the right. And the market rallied up, just fell short of the 13,453. And then the Thursday, we had a trade up into the consequent encroachment, which is the midpoint between 13,480.75 and 13,453, respectively, in deference to that weekly gap I mentioned. And then on Friday, we opened, rallied up into it, through it, and then gave up the ghost and went back down into the order block that's formed on May 9th, 2023 on your daily chart, that down close candle. With these levels in mind, and if you shaded that fair value gap with a rectangle on May 5th on the daily chart, you're prepared to drop down into the hourly chart with me. So let's do that now. Type in 60 and hit enter, and your chart should drop down into an hourly chart. So you should be showing at least the price action from the 10th, where it creates the low at 4 a.m. on Wednesday, rated essentially the consequent encroachment of that daily fair value gap I mentioned this week. Before it was a factor, I said, I'm favoring that one. I'm interested in this area here. And my draw was to the upside, and where specifically that weekly gap. Okay, so those levels were shared with you. You knew about them in advance. I told you my bias. I told you what I'd be looking for. And I did some executions, and you guys, you had an opportunity to see that. So on Wednesday, the market did, in fact, rally up. And then we had that huge rally up at 8 a.m. to 8:30. So we had news driver come out. It came up, just fell short of, what is that high? 13,433.75. That candle is the 10 a.m. on Wednesday on the hourly chart for NASDAQ. And then we dropped all the way down into a repricing to the candles high of 7 a.m. on Wednesday on the hourly chart. So all that buy side and balance, sell side efficiency on the 8 a.m. hourly candle for NQ. We repriced back down to that, but notice the bodies. Okay, look at the bodies on the 1 p.m. and the 2 p.m. candle on Wednesday on the hourly chart. The wicks do the damage, but the bodies tell the story. Okay, so if you read this, yeah, we reached down into that buy side and balance, sell side efficiency. We also tapped into, rebooked to the order block that's on the 3 a.m. candle on Wednesday. See that big down black candle? Well, my candles are black when they're down, but that's your bullish order block. So we had a fair value gap on the 8 a.m. candle, New York local time, and a bullish order block at 3 a.m. We repriced down to it, and the bodies themselves did what? Stayed at the current new week opening gap high and low, right inside that range. And more specifically, the 1 hour candle at 1 p.m. on Wednesday and the opening price on the 2 p.m. candle on Wednesday, May 10th. Both of those candles' bodies were right at current new week opening gap low, which would be last week's new week opening gap. Then the market rallied up, traded up into on 8 a.m. And you might want to be paying attention to these specific times, by the way. 8 a.m. on Thursday, May 11th, we went up to consequent encroachment, which was 13,466.75. You should have that noted. That's the midpoint between 13,480.75 and 13,453, which is that weekly gap I mentioned in tweets. So we went up to that midpoint of that, which is consequent encroachment, stopped dead in its tracks, went down, repriced into the fair value gap and bullish order block. The bullish order block is the two consecutive down close candles on Wednesday, May 10th at 12 noon to 1 p.m. And the fair value gap forms on the 2 p.m. candle, which is a buy side imbalance, so it's on efficiency. It's that big up close green candle. We traded down into consequent encroachment of that, and that price level for consequent encroachment for that range comes in at 13,364. Excuse me. Was that 0.75? Yeah. The low comes in at 13,361 and a half on the 10 a.m. Thursday candle. So it went just below a little bit and ride back up to consequent encroachment of the weekly gap, and then pumped right on through it, just above a little bit on the 9 p.m. candle on Thursday, hugged, traded around between that gap high on the weekly chart and consequent encroachment of the gap. And finally on Friday, it gave up the ghost one more time, sweeping through the high of it and breaking down and trading all the way back down to a completely random current new week opening gap low. And your current new week opening gap low for NASDAQ should be 13,310.50, which just happens to be the Friday low of the day to the tick, not one short, not one over, right to the tick, formed exactly at 2 p.m. So my question to you is, we were only bullish on what market? NASDAQ. Okay. I mentioned that if you were looking at both of those indices, if you're looking at SPOOs, which is ES, it was unable to make higher highs and able to make lower lows when NASDAQ wasn't. Okay. So in your journal, you want to have, when you're looking at relative strength, not the indicator, relative strength analysis, looking for the weaker versus the stronger or stronger versus the weaker. You want to be looking for longs in the market that's showing you it's willing to go higher when the other ones aren't, and unwilling to go lower when others aren't. Either one of those scenarios, and I'll say it again, if a market is willing to go higher when other markets are not, and not just any other market, but closely correlated markets. So what are we referring to when we're talking about indices? We're talking about S&P 500, NASDAQ 100, and the Dow 30. So I don't care about Russell. Okay, I don't care about all these other garbage indices. You only need 3 to watch these markets, and you're going to use them comparatively. So a indice that is making higher highs or not, and I'm not saying it in the sense of a trend. Don't think it's limited to just that. Yes, it's true, but I'm not looking at it from the basis of trend. I'm looking at it on the basis of market structure and liquidity and relative strength analysis. So if I'm looking at a market that's bullish or I deem bullish, I want to see that market perform to the upside faster than the other indices. That's the one I want to be buying because it's breaking out the higher highs before or over the unwillingness of the other indices. That is not always the case that would create a bearish scenario for S&T. And that's why I'm telling you, when people watch me do this, or they'll watch a video where I'm starting to introduce a concept like the Six Sister concept, someone that's just vaguely introduced to some of my things or learned it from somebody else or whatever, it's watered down, they have no idea what they're doing. You think you have an understanding and you don't. And you think that it's a revamping of SMT. It's not. Okay. It's very similar to the idea when I'm talking about order blocks or fair value gaps. If I have a rectangle on my chart, right away, the average person on the internet says, well, it's supply and demand because look, he's drawing rectangles on the chart. That's not the same. So the logic behind what I'm saying is I want to be focusing on a specific market that I would be willing to go long. That market should be willing to make higher highs faster or before the other indices that are closely correlated to it. If it was used for Forex, and yes, this does work on Forex. So don't think that, oh, ICT is just talking about these futures contracts, and I don't trade futures, so it's making me angry. I wish he'd start talking about Forex. I'm talking about markets. I'm talking about price delivery. I'm talking about algorithmic price delivery.